want to talk today about the evolution of money. And we're going to take it all the way to U.S. Treasuries, bonds. We're going to talk about the financial markets. So you can understand how this evolves, what money is, and how that fits into that. So hopefully that makes sense to you. So we're going to talk about the evolution of money. We're going to talk about risk assets, places that we put money, stores of value. We'll talk about how Bitcoin fits into that, correlation with stocks. We'll talk about commodities, other places we can put money. And then, like I said, take it all the way to U.S. Treasuries, which we have a really big report that just came out from Bloomberg Intelligence. Pretty credible people to listen to. And so I want to cover this new report talking about what they see happening with commodities and treasuries and Bitcoin. Lots to cover this week, so let's jump in. By the way, if you're just tuning in, you're listening to the Mark Moss Show. Of course, we talk about what I like to call the decentralized revolution. If you don't know what that means, well, don't worry. I also recently did a show on that, so go back on the podcast and check out that episode if you want to know what I'm talking about. But I'm talking about through the lens of politics, finance, and technology to see how this world is changing, and we're witnessing the pendulum shifting from centralization, swinging back to decentralization. So that's what we're talking about. So the first thing is, like I said, not going back into what is money. I've covered that at length, but really about the evolution of money. So what we use as money. So money, just real quickly, it's a store of value, or communicates value. It's communication. We can think of it as a favor. It's reflective of the goodwill that I put into the world. But what we want to use as money, what do we want to use to communicate that value? Well, it's changed throughout history. It's been many things. It's been rocks and feathers and seashells. It's been commodities. It's been wheat. It's been oil. It's been gold, right? Gold's been money for 5,000 years. And you have to understand first that nobody wants money. What they want is the things that money will get them, right? So what we want is goods and services. We want food. We want shelter, we want clothing, we want energy, and then we want other things after those basic things are taken care of. And so we want the things money will get us. We don't want the money. So in the beginning, we didn't have money. We just had barter. I wanted a chicken, you wanted a goat, so we would trade. But eventually, if I had a chicken, you had a goat, but the chicken's not worth one goat, and it's not really easy to divide the goat up, so we don't have a trade there, or you don't like chicken, so we have no trade there. So then I might say, well, hey, would you take this item instead? And now that item is what neither of us really wanted, but it becomes a medium of exchange, MOE. So in the evolution of money, we'll break down how this works, but it goes from this barter system to this medium of exchange. And what's important to understand is in this process, enough things become kind of common to be this medium of exchange that eventually one will emerge to become the best one. So it's emergent. So free markets choose it based off of what more people want than other things. Now, there's an evolution to how this money works. And so it starts out as typically collectibles. Remember, we don't want the money. We want the things that it gets us. So what I want is the goat, or I want the chicken. You don't want what I have, so would you take this other thing instead? So it has to be recognizable, has to be somewhat desirable, and you have, widely accepted. So maybe you want to be able to trade that to somebody else. And so that medium of exchange would have this evolution to it. And so the way that works is typically it starts out as being a collectible. Hey, look at this cool rock. Look at this cool feather that I found. And it's cool. You like it. It's unique because it's unique because it's scarce. So wow, you don't find rocks that look like this very often. This is super rare. Look how cool this rock is. Or look at this feather. I've never seen a feather like this before. This feather's amazing. I'm going to save this feather. This seashell. I've never seen this seashell. This seashell's not from around this area. We've never seen this before. This is really cool. I'm going to collect it. So see how that works? We don't collect things that are super common that you find everywhere. We collect things that are rare. So think about that first. The scarcity aspect of that. It must be unique, must be scarce, and then we collect it. And it could be baseball cards we collect. It could be seashells that we collect. I know my daughters, they love to collect sea glass. We're surfers, so we travel the world. We go to beaches all over the world. And everywhere we go, they like to find the sea glass, so bottles that have broken. They get tumbled in the sand and the rocks for, who knows how long, years. And the sea glass is no longer sharp, jagged, broken glass. Instead, it gets rounded and smooth, and we can find it in green and blue and white and all these different colors of sea glass. And the bigger the pieces are, the smoother they are, the better, the more desirable they are. And then there's like some really unique colors. So like to find blue sea glass, for example, is very rare. How many bottles do you see that are blue, right? You don't see any. So to find the blue sea glass is way more desirable than like white sea glass is, because you see white sea glass all over the place. All right, green sea glass you see a little bit more often. Anyway, I'm going to talk more about this evolution of money, and then we'll talk about different types of money, and then we'll start talking about different assets like stocks and then bonds and what this new report says. Back to what we were saying, we start collecting things. I was talking about how my daughters collect sea glass, and the more rare the sea glass is, the better it is, the more collectible it is, so blue sea glass being that. So these rocks, these feathers, they become rare. And eventually, enough people start collecting these things that then they could, maybe, eventually, a collectible could evolve into what's known as a store of value. So the first type of money is a medium of exchange, then the next is store of value. So some collectibles become good stores of value, some don't. Now today, we see rich people all over the world storing their wealth, storing their value, a store of value, in collectibles. So rare cars, old cars, jewelry, fine art, things like that, those become collectibles, and they could store lots of wealth. They could store millions and millions of dollars in one car, in one painting. You could have $20 million, $30 million, $50 million in an art collection. So you're storing your wealth. Instead of storing it in cash in the bank, or instead of storing it in stock, you're storing it in art, right? Or cars. Now, not all collectibles become stores of value. A lot of collectibles, most collectibles never do. So, some baseball cards, some people probably have a lot of their wealth tied up in baseball cards, things like that. But if I found a really cool flower, for example, I might collect that flower. It's never going to be a good store of value because it's not durable. Could be lots of reasons why these collectibles never evolve. The reason why I'm breaking this down from this beginning is because I need you to understand this evolutionary process. If the right attributes are there, then it can evolve. If it doesn't have the right attributes, then it can't evolve. Now, it could have the right attributes and not evolve, but it has to have the right attributes. So I want you to understand this.